Let's connect with Jack Albin, Chief Investment Officer and founding partner with Crescent Capital Management. It's a pleasure to have him on the show, and let's connect with him. Good morning. Thank you for joining us. It's too early to say that who will be the next president of United States. But what is your understanding? If Republicans come back, what it means for the financial markets, and if Democrats come back, what it could do for financial markets?
Yes, I'm watching just the market action and looking at how it is behaving relative to what it expects the outcome to be. And what I see is that interest rates will likely rise under a Trump presidency, largely on the policies that you mentioned, tariffs, tax cuts, and immigration restrictions would push inflation here at home higher. It could also prevent the Fed from pursuing its full rate cutting policy. The Fed is expected to act on Thursday this week with a quarter point rate cut. But I think once the election is determined and what some of these policies are put in place, I think the Fed could perhaps rethink that. Also, as I said, interest rates higher. I think U.S. large caps would likely move higher on a Trump regime relative to Harris, and that's just largely on extending the tax cuts and also taking more of a hands-off policy on regulation. Under the Harris and Biden White House, there's been a lot of scrutiny on a lot of these mega cap tech companies here at home, and I think moving away from that would probably ease some pressure on those large cap names.
All right. Let's also get in a sense from you as to what the outlook is when it comes to handling the U.S. economy. What sort of task at hand do you believe the new U.S. president is going to have in terms of the challenges, and what do you believe is going to be the course of action taken by either candidate?
Yeah, so there are a couple of, certainly near-term cyclical challenges. We're seeing slowing in job growth. We're seeing some credit stress. Credit card delinquency rates are going up among certain households. Spending is starting to slow a little bit. And of course, inflation coming down at the same time. So that right now is paving the way for lower overnight interest rates. And that's welcome news for most of us on the economic front. However, longer term, neither candidate has really articulated a concern about our fiscal imbalance. And right now we're running deficits that are approaching 7% or so of GDP. We've now got debt in excess of GDP, 100% of GDP. And one thing that's most striking to me is 2024 is the first year in my lifetime that our country is now paying more for interest expense than we do for defense. And history has not been kind to countries that spend more financing their wars than they do executing them.
Okay, let's see which way it goes. But Richard Harris also joins us on the show. He's, of course, the Chief Executive at Port Shelter Investment Management as well. Thanks so much, Richard, for making time and speaking with us. Well, would you call it still neck to neck, or would you be confident enough to call it out for Mr. Trump, because the margin for now seems to be quite significant?
Well, it's very early days, of course, and the Republicans tend to do well early on. And don't forget that newspapers were calling Dewey to win when Harry Truman actually won back in the 40s. And Thomas Jefferson won by one vote. So, it's still very early to call, but there's no doubt that it's advantaged Trump. And that immediately throws in a lot of issues and pieces into the puzzle that we didn't know just a couple of hours ago.
Richard, so what do you think financial markets are positioned for? Do we expect a sharp reaction depending on what the final decision is, Richard?
I don't think so. I think actually, oddly enough, whether Harris or Trump wins, we may well see a continuation of the rally. We've seen Asian markets, of course, looking fairly perky, maybe because the uncertainty's over. But I think more importantly, we've got a 25 basis point Fed cut probably on Thursday. And that's leading into the usual Santa rally period. So I expect markets actually to be fairly sanguine between now and the end of the year. I think the inauguration is going to become an important point because then people will be able to focus on the kind of policies that both candidates have been talking about. And certainly the Trump policies, if they're carried through to the extent that he's been saying, I think look extremely bad for economies.
Richard, Jack, gentlemen, really appreciate your time and thank you so very much for joining us.
If you like this video, then like, share and subscribe to ET Now.